Greetings, guys and gals. Welcome back here. Welcome back, Joseph James, School of Trade, Sideways Markets. Want to take a quick moment or two here to go over some of the patterns we saw today in our live trade room. And don't forget, if you're a member of mine, you can log right into your advanced course. Just head over to schooloftrade.com. Log into your advanced course, because if you're an advanced member, you have a recap of exactly what we did today. I record every trade room session. We put them right in the advanced. I also put them in the free trial. So if you're an advanced member, head on in and log into your course materials. You can see a full recap of the exact trades we took today in the room. But if you're not an advanced member yet, that's all right. I'll invite you to join the free trial. The free trial is another way you can log in and see exactly the trades that were taken today. And you might just learn something along the way here about our trading methodology as well. Don't forget too, guys, if you are a member of mine, we're going to be doing a special Las Vegas trading seminar this weekend, Memorial Day weekend, so come out and see me. And if you're a member of mine as well, if you're a trial member, we want to invite you to come out and trade with me live in the afternoon. Want to come see me trade? Sign up for the free trial. We'll contact you, invite you into our live trade room. You can come in and see me trade live in real time. All righty, enough of the chit chat. Let's take a look at some of the patterns we saw today. Let's see here. Which one we want to start with here? How about the euro? We trade 4 different markets in our trade room. Just had a question come in from a guest here this afternoon that said, why don't we trade the S&P more often? And of course, you know, we all know about the S&P, but the S&P is a great market, don't get me wrong, but I'll tell you, I have a hard time getting to the S&P, tripping over all these bags of cash we keep making on the euro, the gold, the Russell, and crude oil. You know, one of the things about day trading is once you kind of settle into a strategy, it's really tough to change, right? When you're making pretty good profit every day, obviously the S&P is something we can easily trade, but these markets, what I call the big four, the gold, the crude, the euro, and the Russell, they keep me fat and happy, and they keep us occupied every day. The S&P, from my personality, doesn't really fit because it's too slow. It moves so slowly. And unfortunately, I can't tell the landlord here at the office that I can't pay my rent this month on the office building because I didn't get a setup yet on the S&P. We all know how it goes, waiting all day long for that one setup on the S&P. In the time that it takes me to get one setup on the S&P, I'll get 3 or 4 on the euro, 3 or 4 on crude, gold. Guys, again, this method works on anything you like. Here was an example on the euro today. Euro was pretty good to us today. Had a little bit sleepy personality this morning. That's kind of expected. It is Memorial Day week. We know Thursday, Friday are going to be pretty slow. That's why we're going to be in Vegas doing our trading summit. Now, you know me. I'm a teacher, but I'm also a trader. In fact, from what I'm told, I'm one of the only people that moderates a trade room, right? Trades live and teaches in real time. In my humble opinion, I want to teach you to fish. So I'm going to give you the pole. I'm going to show you how to catch bait. I'm going to show you how to cast. I'm going to show you everything you need. But I'm also going to make it really easy for you to shadow trade. Now, check out this trade here today on the euro. One of my favorite patterns on the euro today. What do you see here? I see a channel. What would the directional bias be to this channel? Well, we got some lower lows. We got lower highs. I'm going to go ahead and say this is a bearish channel, JJ. We call this a price structure. Now, for all those members out there, we know there are 2 things here. There's price structures and there are advanced price structures. This is an advanced price structure. Why do we call it advanced? Because when you line up your Fibonacci tool, when I go from the A up to the B, now here's the trick, guys. We talk about this in training. When it's a bear channel, what does it tell me to do? Sell the highs. What if it was a bull channel? Buy the lows. Okay, sell the highs of a bear channel, buy the lows of a bull channel. Pretty easy? Okay. Now, the way that I'm going to count this is A, B, C, D. And I always trade at the D. Okay, repeat after me. I'm always going to trade at the D when we're talking about channels. This is the rookie mistake. The rookie mistake is to begin at the top, right? And we do this in training all the time. We don't start at the top. We start the count at the bottom. Because you'll see, I want the D point where I'm going to sell. I want that to be at the highs. So I'm going to take out my Fibonacci tool. In NinjaTrader, it's the F8 key, right? So use the F8 hotkey in NinjaTrader, draw from A up to B. Now, the A to the B, we have a specific Fibonacci calculation, a proprietary calculation I've been using for 10 years now. I'll teach it to you as a member. That's going to give me now what we refer to as buy zones or reversal zones, right? This is just a range. Ultimately, what it is it gives me 2 Fibonacci levels, and I know between those two, that's where I'm looking for price to bounce. Am I going to buy C? You could, right? You could, but if you're buying C, you're tripping over nickels and dimes, right? You're tripping over dollar bills to pick up nickels and dimes. What I would recommend is A up to B. That is going to tell me if the C point is qualified. We get into that range, jackpot. Now, in my live trade room, I'm telling everybody in the room this morning, get ready for the D. Get ready for the D. 2-step entry at the D. You can see the entry signal fires off. We get entry signal. We get M pattern. And of course, this is one of the highest percentage trades we'll ever get. It's selling the highs of a bear channel. A to B, B to C, C to D. That tells me this is an advanced price structure. This is not your average bearish channel. It's almost a gimme when we get these type of trades. And you'll notice here, we're going to take our target off right at that swing low. And don't forget, folks, we talk about this all the time. We know that support and resistance is what? It's where traders are expected to react, right? It's not a line. It's not, well, it's a line, but rather than thinking of this swing low as being a thin line, think of this swing low as being a blurry, maybe a thick crayon, right? And so we're not going to put our target right at the lows. For all you new traders out there, put that target 5 ticks above those lows, all right? That way you're guaranteed to get that profit target filled. Who cares about a couple ticks? I want to get the money out of that trade, okay? Bearish channel, great selling pattern there on the euro. Great trade on the euro. How about the gold? As we always say, the ladies can keep the diamonds. We'll take the gold in our trade room. Let's come back and let's take a look at what happened on gold today. Another one of those double tops. Now, it never fails, guys. I always get a question, why do you treat a double top as a buying opportunity? If I've said it once, I've said it a million times here today. A double top, we need to think about the people behind the candlesticks. A double top is a buying opportunity as far as I'm concerned. And you may think it's a selling opportunity. That's perfectly fine by me. But where I come from, we buy double tops. And from my point of view, I think a double top tells me something along the lines of this. We've got buyers moving higher, right? Buyers pushing higher, and they're going to fail. When they fail, okay, we'll take a little break. We'll give it one more try here, and they'll try again. Well, guys, what happens if you fail twice? I don't care what it is, right? You failed to dunk a basketball. You failed to get a winning trade on crude. You fail to, to break new highs. What's going to happen? Human emotions. I'll show you. I'm going to bring the heavy guns up, and I'm going to make sure I break that high, right? So it's human nature. When I see a double top like this, the first thing I think of is these buyers have failed twice. They're probably not going to fail again. Now, just like we talked about with that bear channel, the bear channel gives me what? Gives me a buy or a sell zone. What do we have here? Double top. Another one of these advanced price structures that we teach all of our students in our live trade room and part of our training sessions. Here's how to do it. I know that a double top has 2 tops, and it's always got a middle. I'm going to use my Fibonacci tool starting with the middle, and that's going to give me a buy zone. Now again, this buy zone is just a zone, okay? So I don't know exactly where it's going to go. I can't just put a buy limit right down at the bottom there. What I will do though is I'll wait for price to enter into the zone, consolidate, and then once it starts to go higher, I will either use the W pattern, right, call it 2-step, or we'll use a wave pattern, okay, use that entry trigger indicator. Really, really simple. W pattern into a pullback pattern. Where's my stop loss? Stop goes below swing low. Where's my target? Well, you just told me that, Joe. 1 test, 2 test. I'll show you test, right, all the way back up to that double top. You'll notice entry opportunity number 1, 2-step. W pattern. Entry opportunity number 2. Once we get the 2-step, the pullback right into that trigger zone. And of course, I'm taking all my money and heading for the hills once I get up to that double top again. Now, this, of course, gave you an example. We cut the target a little bit early on that one, but that's how the trade is played. That's how the position is managed. Please remember, guys, we're never risking more than 5% of our trade account on any open positions on these things. And don't forget to talk to your broker about what the risks are regarding trading before you get started. That was the euro and the gold. How about the black gold, the crude oil futures? Now, you guys know we tend to get it on with crude oil just a little bit in our live trade room. It's definitely one of our favorites. And before I go talking about this one, I want to bring your attention here real quickly to a couple key things. Every morning, we've been doing a pilot broadcast with Traders Audio. Over the past few weeks, we've been doing this pilot broadcast with Traders Audio, where we're doing a morning prep at 7:30 a.m. Now, if you want more information about this, all you got to do is contact Traders Audio. Okay, contact Marty over at tradersaudio.com. Tell him you want to be invited to our next morning prep broadcast. It's real simple. At 7:30 a.m. Eastern Time, we talk about what the plan's going to be for crude oil. And if you've been watching my plan every morning, you might have just made a little bit of cash along the way. Here's what I saw today. We saw a big bull channel, right? And this big bull channel, what did it tell me? It told me, didn't we just see this, Joe? Absolutely. A, B, C, and then, of course, there's D. So we already knew going into it this morning that we were going to be waiting for price to get down, and then we were going to try to buy it. What's this number here? What does that say right there? 95.81. I want you to remember that number, 95.81. This chart was posted right on our School of Trade blog, specifically posted on the crude oil squawk portion of the blog. So we knew that 95.81 was going to be a big buy. I'm not done yet. Let's also take a look at the bottom chart. We call this the crude oil 5-minute VIP chart. Open this one up. Guys, these were posted this morning at 7:30 a.m. These were posted at 7:30 a.m. We ain't using no hindsight here. Hindsight's for rookies. Let's take a look at what we thought was going to happen, and let's see if we made money with it. Now, this is repeating myself if you guys have been on the call before. What do we have here? We've got the trading session from London, and we've got the reversal zone of the lows and the reversal zone of the highs. And then right inside of it, I took a Fibonacci retracement level from the highs down to the lows, 96.88. Okay? Again, this chart, not difficult to find. It's posted right on the blog. I put it up on StockTwits. It's on the YouTube page. Right? You could have fallen asleep in our trade room today and found these levels. So really easy to know what the plan was. What was the plan today? The plan was buy the reversal zone, take profit at the 96.88, and take profit back at the highs. I'm going to buy with a W pattern and go all the way up, taking a portion of the profit off using that trigger zone on the way up. So we looked at two charts here. Both of these charts were posted well before we took these trades this morning. Don't take my word for it. Check out the blog, Sideways Markets. There's a tab at the top called Crude Oil Prep. See for yourself. Now you can see here we have a buying opportunity. What's that price level there? 96.47. So we've got 96.47, and what was the other one? That's right, 95.81. Don't forget those levels. Now let's take a look at the trades we took today here. Now we move out of the way here, Mr. Blog, and now let's go grab a chart. Here we are. Didn't take very long at all before we got our first entry signal here just before 8 o'clock. As you can see, there's your reversal zone. There's that 96.88 right there. We never got the second target filled on it. So the first trade this morning here on crude, the first opportunity this morning on crude, again, log into your advanced course or log into your trial course and get all the exact trades we took today. As you can see here, first here, we're going to go into that reversal zone, just like we had projected, buying the lows. I am going to take a partial profit target inside of that trigger zone. It was too two-sided today. It was just a little bit too two-sided this morning. So we didn't really have the confidence to let it run all the way. Now, I did leave a final target up here, but we never got that second target filled. Stop loss gets moved to point of entry once I get my first target filled, and I'm going to get stopped out right here at my point of entry. All right, guys, I'll move my target to the trigger zone, take my profit, move that stop loss from a swing low up to the point of entry. That way I'm not risking anything in the trade, right? If it wants to go in my direction, wonderful. I'm in it to win it. But if it doesn't, I'm not going to make a mistake with that. I'm going to cut that loss before it happens. Next opportunity this morning we saw, same thing. We're going to go up, chop around a little bit. We never quite got in, make a new higher high, and we head right back in again. I know. Why is it going so easy on us this morning? I know. W pattern at the lows. W pattern gets us in. Buying those lows. I have a trend line. Now, there was actually two spots for the target on this long on crude. I chose to use the swing high. You could have also used, do you see it? That trend line. That trend line we found. Of course, that gives you another target. Doesn't really matter where you took it. Again, I'm kind of a conservative target type of trader. I don't really like to push the envelope. The old adage of, bird in the hand is worth two in the bush. That seems to come to mind when I describe how I tend to manage my trades. I'm going to take that money and run. So these were two easy setups this morning, guys. We talked about this at 7:30 this morning on that live broadcast. Now, that was the 96.47. What was that other level we talked about, though? What was it again? Who remembers? It's right, 95.81. That was a 30-minute buy zone. Okay, 95.81. It's a little further down here. Remember how we talked about we were going to be looking for price to fall lower so we could buy the lows of that big bull channel? Right? Remember this chart here again? Where is it? Where's that 30-minute? There we go. Remember that chart? Remember this big bull channel? And remember this buy zone that was just sticking out like a sore thumb at 95.81, just begging us to buy it? In fact, if you rewind the tape on that broadcast this morning, they're always recorded. If you rewind the tape, my exact words were, I could only hope to be able to buy 95.81. Check it out. You'll see for yourself. Let's take a look what happens. Now, we're never going to get that re-entry. I would have taken it again here, too. We would have easily bought it again, but we never get a chance to buy it again, right? It broke right on through, kept on going. Now, here it is. There's that level, 95.81. Okay, we mark up all of our charts well ahead of time because I know that my job is to make sure that you can easily follow along in my live trade room. Guys, it doesn't matter if the moderator makes money and you can't follow the trades. That's the most important part. Okay, remember when you were kids in school and the teacher was so difficult to understand? I had a chemistry professor when I was in college. I couldn't understand a word this guy was saying. How am I supposed to learn when I can't understand? Well, I remember how that felt as a student. That's why I make sure my trade room is easy to understand. Okay, so I want to get down to this 95.81, right? And look what happens here. Almost to the tick. Do you see it? W pattern. Once again, another easy entry trigger. And this one made us the lion's share today. Like I said, guys, I told you earlier at 7:30, I even recorded it. If I get a chance to buy that 95.81, I was drooling over that this morning, and everybody knew this morning that's exactly what we were looking for. Now, crude oil has a very simple market personality. It's a two-step pattern long. I'm going to take profit off now, and I'm expecting this to be a big trade. I'm going to take profit off now at that swing high. Okay, that's the next easy level of resistance. We made it up there relatively quickly here. So swing high, take a portion of the profit off. And then what was that trend line again? There's that trend line again. Now, I wanted this to go to 97. In fact, if you were listening today, I mentioned 97. But this trend line and the market personality made it just a little bit too difficult for me to feel confident. So, of course, I'm going to trail my stop, but I'm going to take this profit off right at that trend line. Right? As I said to our students in the room today, 96.70. 96.70. That was the target. Boy, what a great day. What a fantastic day here on crude. We got the opportunity to buy those lows of the range, which we talked about on the broadcast this morning. We got 2 chances to do that this morning. And then, boy, the trading gods were definitely out to help us today. That 95.81 was tested with ease. And literally, it went right to the target. And you can see here now, we're just slopping around here ahead of Memorial Day weekend. A fantastic trade here on crude. 3 trades here today on crude. And, of course, we can't forget about that mighty mini Russell. How could we forget about this cute little Russell, right? Now, the Russell is definitely one of my favorite E-minis. I'm a big fan of the Russell. I'm a big fan of the YM. I would prefer to trade the Russell for one key reason. Well, maybe 2. What would be the 2 reasons why I would prefer to trade the Russell? One would be liquidity. Okay, the Russell is going to have a little bit more volume. Okay, you can come into our live trade room, ask me to go over this, and I'll go over it. It's pretty easy. Compare the volume. The mini Dow is a lot less. But in all reality, it's the cost per tick. The cost per tick really is my biggest problem. What's the mini Dow? The mini Dow is what? The YM is $5 per tick. Now, I understand the draw to that, right? Less money per tick, it means that a loss won't kill me. But at the same time, a winner won't make me any money either. Now, I use this example all the time in our live trade room because it's important that you guys remember. Trading is a business. We're not playing video games. Well, maybe, I guess these days you can make all that money on video games, so I'll take that back. We're not playing video games. We're not fooling around. I'm here to pay my bills. You're here to get financial freedom. I'm here so you can quit your day job. All right? I'm here because trading changed my life 12 years ago. This is a business. That's why we treat this so seriously. That's why we're here on time every day. That's why we treat our course materials with respect. That's why we make sure that our members have a responsible approach to their trading. That's why I'm never risking more than 5% on a trade, right? It doesn't matter what business I'm in. If I don't know risk management, if I don't specifically tailor my products to fit my business model, in other words, if I don't have an efficient business model, what would be an example of an efficient business model? An example of an efficient business model would be if I was to buy a product for $2 and sell it for $100. That would be a very efficient business model. Now think about that idea. If I have a product that I can purchase for $2 and sell for $100, that's a huge margin of profit. Now think about the YM. How much does it cost me to take a trade? And I think you'll probably figure this out. What's a round turn these days? Right? A round turn for me is about $4.85. Okay? Yours might be anywhere from $4.75 to $5. It doesn't really matter. So bottom line is, it's going to cost me $5 to get into a trade. That's my acquisition cost. Now, remind me again, what is the mini Dow? The mini Dow is $5 per tick. What's the Russell? You got it, $10 per tick. You see where I'm going with this now? Do you see how a business owner would look at that Dow and say, yeah, no thanks. Why would I want to have a 1-to-1 profit margin? No thanks. I'd rather have, you guessed it, I'd rather have a 1-to-2. I'm gonna get into the trade for $5. I'm gonna make $10. Am I the only one in the world that seems to think that's the best way to do it? What do you think about that? Am I off topic here? What do you think? I want to run this business efficiently, which means I want the most amount of profit margin I can possibly get. My fixed acquisition costs aren't changing. What do you think? Post me a comment under the video. Post me a comment on the blog. I want to hear from you. Let me know what you think. Here was another classic example of how we're going to use a specific trading range. I love these time-based trading ranges. They're easy. When price breaks out of them, M pattern, sell the highs, W pattern, buy the lows. Easy. This is a walk in the park. So Russell goes into our bearish reversal zone. Okay, this is a Fibonacci based, this is the highs of the range. There's the Fibonacci level that we put above it. Right? That's a Fibonacci extension up top there. So we're going to get a new high, swing low. New higher high. We actually like it when we see those new higher highs. We call those token prints. And then, of course, the short comes once we fail at the reversal zone. Any guesses where our target is? You better believe it. There's an 83% chance. There's an 83% chance, we've done the math, this price is going to head all the way back down to the lows of that range. And just like we talked about beginning of this video today, we know that we're not going to be rookies. We're not rookies. We know that price levels, that support levels, swing lows, should be considered to be almost like a thick crayon, right? So this is really where the level is. It's not all the way down at the lows, and that's why I'm going to take my profit just a little bit above the lows of that range. And you can see this one paid off nicely. Guys, great patterns today here in the room today. Great patterns. It's definitely a little bit slow. We get a little bit of that long holiday weekend creeping in here, you can tell. Monday, Tuesday had no major news. Wednesday, Thursday, and Friday, I'm going to be in Las Vegas, Nevada for our live trading summit. If you guys are within striking distance of Vegas, we got some great discounts for you members out there. Come out and see me this weekend. Thursday and Friday, we're trading live. I'm going to be teaching everything I know and giving you guys some great material to take home with you. And again, I want to encourage you guys to go check out the broadcast. Check out the links here that are posted right on the blog. Okay, check out the morning prep. Check out the crude oil squawk and prep. See how accurate my trade calls are every day. And don't forget to post your feedback here right below this video. Thank you so much, guys, for being a part of this today. Had a great day in the room. We're having a great week. I hope you are too. Don't forget, guys, you got to learn this stuff so you can earn this stuff, and we'll see you next time. Adios, amigos. Bye-bye for now.